Welcome to TradeTheMBI.com. This is Jonas Reports for the 4th of June. And don't want to say that it's still consistent with our readings, but in fact, it really is. Just a follow through of the MAI magenta still over yellow rising. Same with blue over the gray line here. And from a DOC standpoint, we had midterm buyers green crossing over cyan, which we were looking for, the move of cyan under red, which would match the NASDAQ, which was already there. So from a congruency standpoint, we just continue to look at that rising shakeout, and we expected to reach the 100% on the Morganacci lines here. Whether we get all the way to the original high, this is where the problem is, because again, we just have more and more delays in the reality of what is planned and what is projected. Obviously, inflation moving to non-existent level at this particular stage per all the Fed's data, but the Fed isn't doing anything about it, leaving rates relatively high, given modern era at least, with no justification. So the Treasury took it upon itself to go ahead and just buy up U.S. debt, which is an interesting one in and of itself. So we can see how bizarre the situation is, where in the middle of inflation, the Fed decided to cut right before an election for no justification, only to exacerbate inflation. And then now, where there is none, they choose not to. Take that for what it is, but this is the battle that's going on, and you can see the direct conflict between what Powell's doing versus the policies of Trump administration. So there's a clean disconnect. That, with all of the other legal challenges, has delayed everything that's been taking place, and that's why, while everything's still leaning towards a bullish thing, you're not getting the explosive potential of growth because of these hangups. And the earliest point they're going to have any sort of resolution is going to start moving towards the end of the year, where if there hadn't been the roadblocks, probably would have already started to see it. From a Treasury standpoint, you can see that problematic yield structure right there. It's not beneficial. And oil also not cooperating either. This idea of, drill baby drill just isn't panning out at least enough to create excess supply that would drive things down, which is an indication, though, that there's still economic growth. So you can play it within that. The strange thing is the relationship with the dollar versus euro and other currencies. Dollar should still be strong, but of course there's this narrative on the tariff situation still. And the more that plays up and down, it continues to create uncertainty, and that's where there's volatility at this particular stage. From a gold standpoint, that's still holding the narrative, keeping gold and them from declining, because relative to what you see from an inflationary standpoint, it's relatively non-existent, at least from a acceleration standpoint, as long as, of course, oil stays where it is, which at this particular stage doesn't look to have any major disrupt, unless there's some kind of activity from the Ukrainian-Russia conflict, which is always still at the back of everyone's mind, and whether or not all of a sudden the Iranian situation will pop up or something to that effect. From a Bitcoin standpoint, a nice little reaction, but it's faded off from that little one, and it's just kind of holding on what it can from the negative readings that it has at this particular stage. So it's basically consolidation, same with what's seeing on ETH. We look at it from the intraday chart. We had the big run up, and of course then we had the MBI white spike, so that led to a move back towards 50%. But right at that point, MBI magenta took back over again, and that's where you got the short cover rally. MBI white trailing behind that cleanly, so it was pretty clear within that. And as soon as we got the crossover, you ended up with a brief move down, but there's not enough short activity at that particular stage to do anything. No spike above, so all fairly clean from within that standpoint. It's pretty clean when you look at it from the intraday standpoint. It was just a ride up. So you might see some fill back to kill out any of that call option capability, which is sort of what's happened here in the post market. But as we grew later into the session, things have started to heat up, because that buying pressure, as we talked about, new fund money has arrived, and it's got to have a place to go, and they're not going to sit on it this particular stage. And you do have some competition with treasuries, but some still, I think, believe that higher rates are inevitable with the inflation. So you have that dichotomy built into it as well. So that's part of what makes the market move, these differing views on where things will be a time from now. As always, though, we get to see it a little bit earlier, and we'll just continue to follow the readings. As always, though, anything relevant, I'll put it on our team chat. Have a good one. Trade well.